Thank you everyone for joining us today. I'm very excited to kick off our session by framing the discussion before handing it over to my colleagues who will unpack the details and the examples. If we can go to the next slide. So we'll do a quick overview of what we intend to cover today. So our conversation will move from understanding the uneven landscape of today's circularity and circular economy, why progress looks so different across regions and industries. And then we will explore some of the business logics and archetypes that illustrate how organizations are applying circular principles in practice. We'll then look at scaling actors, so the large enterprises and the joint ventures that are shaping how circular models are achieving real-world scale. And then we'll discuss the future path toward profitable scaling. So finally, we do hope to be able to open up conversation for further reflections and dialogue and invite your perspectives and questions as well. So if we can go to the next slide, please. We'll just sort of level set here and ground ourselves in what we really mean by a circular economy system. So unlike and in contrast to a traditional linear model where we take, make, and dispose of materials, a circular economy is regenerative by design. So it's not just about recycling, it's also about redesigning that entire system so that the economic, the environmental, and the social benefits reinforce one another. There are really three fundamental principles that define this system. So first, as seen here, it eliminates waste and pollution by designing products and materials for durability, for recyclability, for safe use from the very start, so that we prevent excessive waste buildup. And that becomes a very intentional part of the design process, not reactive. Second, it circulates products and materials by keeping them in use for as long as possible through reuse, repair, remanufacturing. This is where viable reuse and recycling pathways become critical for that long-term value retention. And then third, finally, it is regenerative by nature. And this means shifting from finite fossil-based resources to more renewable and bio-based materials that are actively restorative for ecosystems rather than simply reducing harm to them. So when these three principles work together, that's when the circular economy becomes that kind of flywheel of continuous value creation. And it is one that we do believe aligns both environmental resilience with business growth. We'll go to the next slide. Before I hand it over to Sharth to discuss the first topic for today, I'd like to just point out to our audience that you can reach out to our analysts if you would like to have a more in-depth conversation on this particular topic, or you're welcome to a couple of complimentary viewpoints from our analysts on happenings in the circular economy. So please do avail yourself of these assets. And now I'm going to hand it over to Sharth, who will spend a few minutes discussing circularity's uneven landscape.
Yeah, thanks, Gillian. Good evening, everyone. Thanks, Gillian, again, for giving us a crisp introduction on how circular economy is actually a model which is designed to, minimize waste and maximize resource recovery by keeping materials in the loop for as long as possible. But before we deep dive into circular economy, we must first consider the harsh reality. Is basically the fact that despite the growing momentum and the corporate social responsibility pledges, within the world, the economy is largely linear. And the waste generation in terms of municipal solid waste is projected to increase from 2.1 billion tons in 2023 to 3.8 billion tons by 2050. And this is based on the linear economic model projections sourced from United Nations Environment Program. And the forecast is not looking good. And by the current practices, it anticipates a steady increase in the waste generation by 2040 by 22%, and by 2050 another 15%. So and furthermore, if the scenario currently persists, the global average waste collection rate, which represents the proportion of waste, proportion of generated waste which is actually collected, is only approximately 75%, and it is unlikely that it is going to increase drastically in the foreseeable future. So this means that a lot of waste is left unattended or illegally dumped in landfills or water bodies, resulting in severe impacts on human health and the environment. With moderate waste collection rate, that implies that the recycling rates is also reduced, which means that the proportion of collected waste that is processed and reused as secondary materials is also low. It is worth noting that only a handful of high-income countries have waste recycling rates of over 50%. And in general, countries within, let's say, Middle East or Asia Pacific will have as low as 10%. So if I have to give good examples, within very few countries in Western Europe and Asia Pacific countries like South Korea, Japan, and Singapore has, quite a high recycling rate of 37 to 56%. But others have very low, other countries have very low recycling rates, and it is mainly due to inconsistent policies and heavy reliance on landfilling. So enhancing the waste collection and recycling rate is the pressing need of the hour, and a robust circular economic model, which will create a closed loop system, will make sure that the waste generation will be reduced to 1.3 billion tons by 2050. Again, this is based on the United Nations Environment Program sources. And the next slide will provide the region-wise information on the amount and type of waste which is being processed and recycled. So I would start off with the best, the Europe. It has the most proven and well-established approach for waste recycling. Its circular material use rate, CMUR, which measures the percentage of total material that comes from recycled or recovered materials instead of virgin materials, is actually 11.8%. And it's quite higher than the global average of 6.9%. Basically, it has a robust regulatory framework to achieve this rate. And furthermore, up to 40% of its waste collected is used as feedstock to waste energy plants, including anaerobic digester or pyrolysis or gasification, and only 11% is landfill. So it's a good sign within Europe. But as far as North America is concerned, it's actually the reverse. Only 11% is processed by waste to energy plants, whereas 52% is landfill. So that's the reverse. But the situation in Middle East and Asia Pacific is a little dire, and it requires significant improvements in recycling rates, which are currently as low as 10%. And there is a lot of dependencies on incineration facilities, especially in the Middle East, because they try to create that waste to energy perspective, but that leads to a lot of ineffective recycling. Meanwhile, within Asia, there is uncontrolled dumping or open burning of waste, which needs to be significantly reduced. In terms of what they're doing good, within Europe, recycling bio-based and plastic waste has achieved an industrial scale, whereas in North America, recycling plastic waste is still in pilot stages. But apart from Europe, all regions need to reduce their dependency on landfills while transitioning from incineration to other advanced recycling technologies. Transitioning is a very important part to improve the waste collection and recycling rates. So this slide will provide an information of what needs to be done in terms of improving the region-wise handling. However, they require robust policies and regulatory frameworks to execute circular economy, because policies compel companies or individuals, small-scale stakeholders, to reduce their chemical portfolio, thereby reducing leakage and accelerating long-term resource efficiency. So in the next slide, let's talk about how there is the region-wise regulatory policy and how it aids circular economic models. So again, I'm going to start off with Europe because that's the best performing region. They have this circular economic action plan, which aims to reduce the EU's consumption footprint and achieve 90% of waste recycling rate by 2050. They're currently at around 50 to 56 in Western Europe, so they are not so far off, but it still need progress. When it comes to North America, they have this national recycling strategy, which aims to achieve 50% recycling rate by 2030. Currently, they are at around 37%, so they're not so far off. But again, they are also supported by state-wise guidelines like the California SB 54 and Oregon SB 582, which accelerates and ensures that optimization and recycling modernization is done through research. And within Middle East, the circular economy policy of the United Arab Emirates 2021 to 2031, it aims to use natural resources more efficiently, and their goal is to divert 75% of the waste from landfills and achieve 80% recycling rate. Well, that's a steeper goal, but again, I hope they achieve it by 2030. South Korea is more logical and more rational. They want to achieve 50% recycling rate. They're there, and they would also like to achieve 70% waste recycling rate by 2030. So thus, I would like to say that robust regulatory framework forms the basis of accelerating a circular economy. So in the following slides, we'll see how stakeholders, have a worldwide approach in deploying circular economy at large scale. But before that, over to you, Jillian, for the poll. Yeah.
Sure. Thank you, Sharath, and thank you for that great information. So let's go to the next slide. We do want to invite our audience to participate in the first poll for today, and we'd like to know from you what is the strongest catalyst for scaling circularity in your industry today? Is it customer and brand demand? Is it regulatory and compliance pressure? Is it cost and resource resilience? Is it investor expectations, or is it technology breakthroughs? So we'll give you a second there to drop your answers into the poll. But while we're waiting, Sharath, just to kind of take us back to what you were presenting, you did a really nice overview of some of the regional situations, but I'm curious, what are some of the bottlenecks that you're seeing in terms of activating the circular economy?
Yeah, so the main bottleneck we presume is that when it comes to small scale and medium scale stakeholders, they have this stubborn reliance on ineffective practices, like the use of ineffective incineration facilities that emit toxic gases like dioxins and furans, which is even making the situation bad. So this necessitates the need for a state-of-art infrastructure deployment for waste management. So I think that is the need of the hour, which needs to be concentrated on.
Great. Okay, so it looks like we had a two-way tie there with cost and resource resilience and technology breakthroughs. So both quite interesting, and I think we're going to be covering a little bit of those areas as we move forward. I'm going to pass it on to Sanchari, who's going to pick up with our next section.
Thank you, Jillian. Hi, everyone. I'm Sanchari. And if we could go to the next slide, please. Thank you. So I'll be walking you through some of the practical archetypes in this section that leading companies are already using, supported by some of the real case examples. So these aren't just concepts, they are proven business models that show how circularity can generate both economic and environmental value. So you'll see how firms are rethinking their inputs, extending their product life, and recovering resources, each one with tangible results. And as I go through them, think about which of these models could be the most relevant or actionable for your organization. And that reflection will make the rest of our discussion far more meaningful. So if we could go to the next slide. Thank you. So here's the big picture. So it's actually the business map of a circular advantage. So at the firm level, companies can move on their own through three main strategies: circular inputs, product life extension, and resource recovery. We'll be looking at each of these individually, but just for an outline, circular inputs means switching from virgin to sustainable feedstocks. Product life extension keeps products in service longer through repair, reuse, or upgrade. Resource recovery transforms waste into valuable inputs. Now that's from a firm level perspective. Now from an ecosystem level, we see that success depends on collaboration. So herein we see industrial symbiosis, circular packaging, and reusable packaging as some of the top examples, wherein multiple players are kind of coordinating and sharing value. And cutting across both these levels are the circular service models, more as a service models, where businesses pay for outcomes rather than the ownership. So these models overall not only reduce waste, but they're also creating a recurring revenue and customer stickiness as well. So if firm level models are great for getting started, ecosystem level partnerships are what truly scale the impact. So let's now delve deeper into the first one, which is the circular inputs, where the transformation actually begins. So if we could go to the next slide. Sure. So when we talk about circular inputs, we're talking about designing our material strategy to eliminate dependency on finite fossil resources. So again, here there are three main approaches: bio-based, renewable, and post-consumer recycled inputs. And each of these play a different but a very complementary role. Take bio-based inputs, for example. DuPont's bio-PDO from corn sugar saves nearly 15 million gallons of gasoline a year and uses 40% less energy. Now, that's a real example of performance and sustainability going hand in hand. Then renewable inputs again. So, such as, say, carbon-derived or algae-based materials. Now, here again, companies like Econic, they use captured carbon dioxide, which is sourced from external industries, to make polyols for foams and adhesives, and they cut their carbon footprint by nearly 30%. Finally, if we look into the post-consumer recycled materials, which is actually the backbone of circular loops, PureCycle's example is fairly great again. So their solvent process restores polypropylene to near virgin quality, even after multiple cycles. So these examples show how supply chains are becoming more circular or more greener and more resilient. Now, of course, we'll have challenges like feedstock consistency or certification, but innovation here is closing these gaps pretty fast. Now let's look into the second aspect of it, which is the more logical step, of course, once we have secured better inputs, which is making products last longer. So that's going to be our next theme. So if we could go to the next slide. Thank you. So this part is all about getting more value from what we already have. Now, extending a product's life or repurposing its materials is often the easiest way to lower costs and emissions. Now, let's start with repair and remanufacturing. Companies replace or rebuild components without any loss in performance. Here again, we can take an example of Caterpillar, and that's a fantastic example as well. So they rebuild and resell manufactured parts at about half the cost of new ones, processing about 134 million pounds of components every year. And that's massive. And they're approaching zero landfills in some operations as well. On the recycling and the repurposing part, the focus is more on advanced recycling. So here we can take into consideration chemical or biological or even thermochemical conversion. BASF's chem cycling program here is again a great example, and it turns 2 tons of mixed plastics and tire waste into 1 ton of new polymers, thereby cutting emissions in half as compared to traditional incineration. So when these companies are factoring in the avoided waste cost and brand value, these circular models often outperform the traditional ones on total life cycle economics. So, of course, logistics or warranties and customer perceptions, these can be hurdles, but they can be solved through data transparency and even service innovation. So, after keeping materials alive, the next plausible level of circularity is about turning what's left or the so-called waste back into the feedstock. So let's look at how that works. So if we could go to the next slide. So resource recovery is where circularity is becoming really transformative. So here again, we can think of this in three main dimensions: materials, energy, and nutritional elements. So under materials, technologies like depolymerization or smelting, these bring the metals and plastics back into the supply chain. So rockwool, for example, they are turning construction waste into stone wool insulation, and thereby they are drastically reducing the virgin mineral use. Now, under the energy section, processes like pyrolysis or liquefaction or gasification, they convert complex waste into syngas or specialty chemicals. What is an example here? Enerchem. Enerchem is a great example because they turn municipal waste into methanol and ethanol in their Canadian facilities. And under nutritional elements, we have an example of Ostara, which uses anaerobic digestion and struvite precipitation to recover phosphorus, nitrogen, and potassium. So what are they doing? They're ideally turning the waste into high purity fertilizers, which can boost crop yields. So the business upside here is very clear: lower landfill cost, new revenue streams from waste, and alignment with policy incentives for renewable inputs. So to wrap this section up, circularity isn't a single step, it's a system evolution. Companies begin with internal firm level actions, then grow through ecosystem partnerships, and finally mature into fully service and recovery driven networks. So for the next section, I would pass on this presentation back to Jillian. Jillian, over to you. Thank you.
Yeah, thank you, Sanchari, so much. So we have one more poll question for you guys. If you can answer, what would most help your organization move from pilots to profitable scale? Would it be stronger customer demand and willingness to pay? Would it be new financing and investment models? Would it be more effective partnerships and ecosystems? Would it be access to proven technology at lower cost? Or would it be clearer, more consistent regulation? So I'll give you a moment there to respond, but while we're waiting for those results, I do want to remind everyone that you're welcome to reach out to our analysts and schedule a conversation and assessment. They're more than happy to talk with you and or download a couple of our complimentary viewpoints covering key topics and trends in the circular economy. And there's some quite interesting ones that are available, including the intelligent circular economy, circularity at materials frontier, digital product passports, all new research from our team. Okay, and it looks like stronger customer demand and willingness to pay was the top, I guess, driver there that would really push organizations to move faster from pilots to profitable scale. So thank you all for participating. I'm going to pass it over to Cecilia, who's going to talk a little bit more about scaling.
Thank you, Jillian. Well, let's move to the next section. So we have seen now how individual firms, right, to all these archetypes, right, how individual firms can implement circularity through design, fixed dot substitution, recovery loops. So, but while these models prove that circularity can be even profitable within a single enterprise, the next challenge is scale, right? So we learned that no one company, I mean, by definition, right? So no matter how sophisticated, can industrialize the circular economy in isolation. So scaling circularity requires coalition economics, coordinate investment, shared infrastructure, new forms of capital architecture. So if we move forward, let us focus on the actors of the scale, that is the joint ventures, the public-private partnerships, and acquisition strategy that could help us to translate corporate ambition into system-level transformation. Going to the next slide. Building connected ecosystems, right? So one of the results from the polls, for instance, was about more effective, right, partnerships. And also, well, when talking about customer demands, it seems, or willingness to pay, it seems like there is some inefficiency, right? Because if willingness to pay means that everything is translated to the final user, and this is this means that at some point the model is not efficient. So building connected ecosystem is the key. The success is grounded on networks that share utilities, materials, and data to maximize productivity and minimize waste. So industrial symbiosis, it was, remember in the previous section, so those that we have the archetypes for the firm level, we have the archetypes in that we talk about the ecosystem. So the first one, it was industrial symbiosis, exactly achieves that. So it allows multiple companies to exchange heat, energy, materials across boundaries, converting what was once waste into productive feedstocks. So this line features 3 leading examples. Of course, there are many more, but these 3 leading examples that capture the diversity of models emerging worldwide. So we have examples from joint ventures in critical mineral recovery to distributed recycled technologies, multi-country industrial hubs. These are all examples of industrial symbiosis. Stellantis and Orano, that's the first example we will see now. So this battery circularity is a material hedge. So this joint venture between a global automaker and a nuclear materials specialist focused on recycling end-of-life EV batteries and gigafactory scrap in Europe and North America. The technology combines mechanical dismantling, hydrometallurgical leaching, solvent extraction to recover high purity nickel, cobalt, and lithium, all very valuable, very critical minerals today, very valuable. So the integrated process achieves over 95% recovery of critical metals, feeding them back into the new cell production. So the joint venture pools logistics, permitting pretreatment under Orano's material handling expertise, while leveraging Stellantis' network of vehicle take-back programs. So the collaboration balance throughput, steady plant supply from production scrap, and predictable end-of-life flow from dealer networks. So the joint venture's value driver isn't recycling margin alone, is supply chain risk mitigation. So by internalizing critical metal recovery, Stellantis shields itself from price volatility and potential import restrictions. Orano, in turn, monetize underutilized refining assets. So together they have created a closed-loop critical mineral ecosystem where revenue, risk, IP are all shared under long-term supply agreements. Another great example in Japan is Yokogawa and microwave chemical. This is grounded on energy and data convergence. So Yokogawa's process control expertise meets microwaves chemicals catalytic know-how to build distributed chemical recycling system. The microwave heating technology developed by microwave chemicals precisely decompose plastics at precise molecular frequencies, achieving depolymerization with 25% less energy than conventional pyrolysis. The system integrates also an energy management platform that tracks consumption per batch in real time and optimize power draw against renewable availability. So rather than one large plant, because of the technology, right? So it's based on microwave, it needs to be modular. So this model deploys this model smaller units located near feedstock sources. So Yokogawa ensures reliability and quality via predictive control algorithms, remote diagnostics, AI-assisted scheduling. And the distributed approach reduces feedstock logistics in 30–40% and also increase local employment, precisely with this distribution into smaller plants. So energy efficiency and traceability combine to unlock green financing eligibility. This is another factor that makes this very attractive. So beyond the synergies for the technology per se and the savings and the sustainability angles, right? So get eligibility for financing is a key parameter, right? So the real innovation is also that the energy use data itself becomes a financial asset. So the verified metric that qualifies for performance-linked loans and renewable certification credits. This example also well there is a digital instrumentation and process control as well in the technology development that could help to turn recycling real from an energy liability in also a bankable operation. So the third example is the EU industrial symbiosis hubs with shared utilities for then share growth. So there are projects in the Netherlands, in Spain, in Germany, Turkey that showcase ecosystem level integration across energy intensive industries. So the technology use common utilities, water, compressed air, carbon dioxide reuse, waste heat networks that link chemical, metallurgy, manufacturing facilities. Also, digital twins monitor flows of energy and byproducts across participants, optimizing exchange schedules. So each hub functions under neutral host governance. So it combines 40% public investment and 60% private capital. So shared infrastructure avoids duplication of boilers, chillers, pipelines, any other kind of equipment of this type. When one facility is under maintenance, another one can fill this gap, maintaining system uptime, for instance. So the economic logic here is also these hubs behave like industrial real estate trusts, so long duration assets with stable yield streams. So companies pay service fees for utilities while revenue from byproduct exchange and water, waste heat sales offsets maintenance costs. Per firm, capital requirements fall by 25-35%, and regional employment rise also through service outsourcing, right? So this is a great example of something a success, right? So moving to the next slide. Let's talk a bit more about the investment, right? So the financing, the future of recycling. So circular projects face a dual challenge. One is capital intensity, and the other one is unpredictable early stage cash flows. So pooling public, private, and industrial capital address both by spreading risk and ensuring liquidity. One example here, also with select examples, is closed loop partners with circular plastics funds. It's a corporate-led financing model designed to bridge the infrastructure gaps in the US plastic recycling. So it's focused on invest in advanced sorting, mechanical recycling of rigid plastics, chemical recycling of flexibles. It prioritize most mature technology with verified throughput rather than speculative kind of innovation. So the risk a bit from this point of view too. There are corporates like Dow, Leon del Vassell, Nova Chemicals, Coinbase with infrastructure funds too. Long-term offtake contracts guarantee demand for processes, resins, the risk in plant cash flows. So projects are screened for quality certification, of course. We are talking about the AICC Plus, for instance, and traceable material tracking to align with EPR requirements. There's an economic impact here, but pooling enables portfolio diversification. So a mix of assets of different maturity stages creates predictable return. So investors accept moderate yields because risk is reduced through precisely the offtake and policy banking. Another good example here is the Global Environment Facility from the United Nations Environment Program. With this plastic integrate program, it's a multi-country initiative demonstrating how development finance accelerates industrial circularity in emerging markets. So in these programs, this program supports infrastructure for collection, washing, reprocessing of single-use plastics into recycled feedstocks for food and beverage packaging. So the program's technical assistance component establishes quality standards and digital tracking, operates across 15 global south countries through blended financing. So governments supply land and logistics, and corporations provide processing technology and training. This pooling funds enables early stage capacity building where private capital alone would be hesitant. So each local plant gains access to verify standards, attracting follow-on private investment once risk decrease. So that's the the main purpose. The third one is the World Bank recycling bonds. So completely market-based instruments linking financial performance to verified circular outcomes. So these funds support the recycling infrastructure for mixed plastics in Ghana and Indonesia. Technology scope covers mechanical recycling, waste to fuel conversion, digital waste tracking. Bond coupons are tied to measured performance. So in this case, total plastic recovered and verified by independent auditors. So data transparency ensures accountability, setting a precedent for impact-linked debt instruments. So this is a practical example of how verified data becomes currency at some point. It reduces perceived risk for investors, again, and expands the circular finance market and ties capital access directly to operational performance. So together, these initiatives represent three tiers of financial innovation: corporate pooling for mature markets, blended development finance for emerging regions, like the 15th subcategory, and impact-linked bonds to global capital markets. So their share insights that circular projects are not underperforming per se. They are sometimes underfinanced. So pooling fix a bit this asymmetric. So we are talking about uneven position in this circularity. So pooling fix a bit this asymmetry and aligning investor confidence also with verified operational results. In the next slides, we will see what happened. Well, when circularity matures, so speed becomes critical. Companies cannot wait for organic capacity growth, and they need to acquire technology, feedstock, talent that already operate at scale. That is why merger and acquisitions has become the fastest pathway to operational circular capability. One example is Dow and Circulus integrating mechanical recycling into polymer value chains. Circulus operates mechanical recycling lines that purify and reprocess polyethylene film waste into post-consumer resins suitable for packaging. Dow's acquisition brought in advanced washing and extraction systems capable of maintaining resin quality across multiple reuse cycles. So Dow integrates Circulus recycled resin directly into its existing component and field production infrastructure. This closes the loop between waste and virgin polymer production, reducing the need for new cracking capacity. So from an economic logic, the acquisition accelerates market readiness for PCR post-consumer resin film applications while avoiding also 2 to 3 years of greenfield risk. So Dow benefits from feedstock diversification, improved compliance readiness for APR driven recycling content mandates. Another example is between LyondellBasell, ExxonMobil, Agilex, with the strategic stake in Cyclics International. Cyclics aggregates and preprocesses mixed plastic waste for chemical recycling, so employing proprietary sorting algorithms and chemical characterization analytics. LyondellBasell and ExxonMobil secure feedstocks for their pyrolysis-based recycling plants, while Agilex scales its chemical conversion technology. So the partnership ensures consistent feed quality while directly improves yield and reduces downtime. So this stake transforms feedstock from a market purchase into a controlled input, protecting production economics and ensuring traceable material provenance. So with this, a key differentiator in sustainability-linked contracts. Another example is the closed-loop packaging consolidation between Sonoco and Everest. Everest is a European leader in aluminum and steel packaging recycling. Its metallurgy and can reconditioning facilities achieving near-perfect recovery rates. So between both organizations, the operational synergy is evident with Sonoco integrates Everest's recycling capacity into its global packaging network. So combining metal with fiber and polymer loops to serve brands seeking multi-material circular solutions. So this merger and acquisition move repositions Sonoco as a multi-material circular packaging platform, expanding its market access to fast-moving consumer goods brands under pressure to prove recycled content compliance. So these three transactions together highlight the synergy between technology readiness and also strategic timing. So acquiring at the point where processes are proven, demand is growing, and regulation enforces differentiation. In the next slide, we will see one final angle in that licensing and take back for fast track and technology diffusion. So scaling circular technology globally requires more than capital, right? So it requires reapplication at the speed and consistency. So without every company needing to own and operate identical assets. So this is why licensing and take-back models come in, transforming intellectual property and reverse logistics also into accelerators for worldwide diffusion. The first example we will see, I insist they are not the only ones, but there are quite good examples to illustrate the whole situation, is Lummus and Sumitomo. In that, we can say licensing as a multiplier. So the partnerships commercialize advanced depolymerization and solvent-based recycling technologies for low-density polyethylene, ethylene, vinyl acetate, and polymethyl methacrylate. And Lummus acts as the global licensor, packaging process design, catalyst supply, and control systems into a turnkey offering. Sumitomo provides validation data and product certification, ensuring new licensees meet performance and regulatory criteria. So the model decouples technology scale from capital intensity. Instead of building every plant, Sumitomo gains recurring royalties and market presence. Lummus expands its technology footprint. So for adopters, licensing lowers R&D risk and accelerates market entry. So it's a win for both sides. Another example is between LanzaTech and Sekisui for the biological conversion with local ownership. So LanzaTech's gas fermentation platform converts solid waste into ethanol, which becomes a feedstock for chemical, fuels, and packaging. Sekisui brings waste collection logistics and regulatory familiarity in Japan. So plants are locally owned and operated under master licenses. LanzaTech provides process control, software, microbial IP, while Sekisui handles compliance and distribution. So the result is a rapid national deployment with minimal central oversight. So by transferring operational ownership, LanzaTech achieves scale through partners rather than assets. So and licensees earn from product sales, while licensors secure steady royalties tied to verified production. The last example we will see here is another project in Japan, PLA Relay project, localized take-back for community value. So it's another angle. So we will see the diversity of examples here. So simple mechanical and chemical recycling of plastic bottle caps, very simple, into raw resin for new packaging. So each unit uses standardized sorting bins, washing modules, extraction tools, suited for small community volumes. So a public-private coalition involving the Kashima City, Mitsubishi Chemical, and local school. Waste is collected locally, pre-processed regionally, and sold back to national packaging converters. So through small in scale, is very profitable through avoided landfill fees, social license, and also local employment. So this model proves that circularity can also generate value even in low capex and high engagement context. Well, these were mainly the examples talking about the scaling actors of what companies are doing. Let's see a bit more on the future path in the next slide. So the models we discussed, symbiosis, pooled capital, mergers, licensing, all lead to the same conclusion. Scale is achieved through integration, never isolation. So this next section quickly explore how multiple industries, regulator, investors now can codify this integration to structured ecosystems. So going to the next slide very quickly, just to summarize what we saw. So industrial circular hubs, infinite recycling loops, service model, capital models, all together build the structural layers of the scale. So share infrastructure through symbiosis, share capital through pooling, share capability through merger and acquisitions, share knowledge and material flow through licensing and take back. Now we will see in the next slide to finalize the scale framework, which distills everything we have discussed today into a single actionable roadmap. So a way for organizations to move beyond pilots and make circularity part of their operation system. So each letter here represents both a stage of maturity and a level of performance. So let's start with the first one. So the S, stay current. So the first step is about visibility, knowing where you truly stand. So most organizations still measure circularity by counting projects. That tells you activity, not performance. So the relevant metric is the material circularity rate, the percentage of total input sourced from renewable or recycled feedstocks verified by plant and procurement data. So we see in the statistics at the beginning of the conversation that the latest global benchmark played these numbers at only 6.9% worldwide. And let's say the best one, 11.8% in Europe. So that gap is not just environmental, it's also economic. So it signals where regulatory exposure and investor scrutiny will land next. So think of it as your company's circular exposure ratio. So the share of your portfolio at risk of higher compliance costs or carbon premiums. So in lending and procurement negotiations, that number is already influencing credit terms and contract duration. The C is for the circular archetypes that we see, right? So more related to a single firm, more related to how this single firm work in the ecosystem. You need once you know your baseline, the next step is to choose the business model that match your operational strength. Not every company can run every model. So if your edge, of course, is process control, yield management, R&D, focus on circular inputs or resource recovery. Naturally, if you manage large installed assets or product fleets, consider service-based models. So each archetype creates a different financial and operational rhythm. The A is for the actors of scale. So circularity and industrial scale is not a solo act, requires ecosystems. That's the main point here in the conversation. Also, well, there are different ways that companies can leverage complementary strengths. Also, beyond joint ventures, neutral host operators are emerging also as well. And the L is for levels for the future. There are the enabling conditions that determine whether circularity becomes profitable. That is regulatory predictability, blended and programmatic finance, technology readiness. So these levers reduce uncertainty and risk perception, which is what lowers the effective cost of capital and enables growth without subsidy. And finally, engage and reflect. So engagement is about institutionalizing circularity so it endures leadership changes and market cycles. So companies that maintain profitability in circular models treat this as an adaptive system, not a static program. So taken together, the scale framework shows that circularity is in fact an economic operating model. So stay current, give you the truth where you are. Circular archetypes give you the focus, or also how to perform. The actors of the skills give you reach, and the levers of the future, the momentum and the engagement reflects give you the endurance. So if these 5 elements are managed deliberately with clear data, disciplined collaboration, transparent governance, circularity delivers not only compliance, but competitive advantage, lower volatility, higher trust, and profitable growth. So let's close today. I think, well, we have only a few minutes for the discussion points. So let's move to the next slide for the questions. If you have any questions, please provide them all in the chat. We can try to answer now. Otherwise, we, of course, we reach you individually to for discussions and to provide an answer. So we are very grateful. We received a lot of questions during the registration period, and we can try to answer some of them. I think my colleague Jared here could start maybe very shortly.
Yeah.
We can, yeah, please go ahead.
Yeah. Thank you, Cici. Thank you for the presentation. There was one very interesting question which says, what is the timing for circular economy scaling and what are the key drivers? To answer this in a very crisp way, it will scale when it becomes cost competitive with the linear production. So only when you start getting competitive return of investment through resource productivity or collaboration, that is when the actual scaling of circularity will take place. So when it comes to short term, within short term, you would see a lot of policies and regulatory frameworks coming up within developing economies too, followed by the necessary infrastructure development. And then you would see a lot of material recovery facilities or mechanical recycling facilities for producing and selling post-consumer assets. So that will be the short-term time frame. Within the mid-term or between 2027 to 2030, you would see a lot of trackability and traceability technologies which will be incorporated within recycling facilities. That includes like digital passport, product passports, and blockchain, within all regions. And then you would also see a lot of business models where CC explained about anything as a service. So circularity as a service will come up, where even a recycling or an infrastructure as a service will be given, where you would cut short significantly on the capital expenditure as far as infrastructure is concerned. And then within large scale, within the long term, post after 2030, we'll see a lot of regional hubs coming in, where the hubs will combine recycling infrastructure, renewable energy generation and storage, waste heat recovery, and even some cases that you will have an integrated carbon capture utilization support as well to maximize resource optimization. So this will be the long-term, scalability as far as circular economy is concerned. And as far as the drivers, regulatory changes, the buyer behavior, and technology advances to support or enhance resource recovery will be the major drivers. So I think that sort of gives you a small answer to the question. Maybe Sanchari can take another question.
Yeah, sure. Thanks, Sharad. So we received another very interesting question. So how are we using AI in chemical industries? So to give you a very brief overview, AI can be used structurally across the different sections or the different segments of the chemical value chain. So for example, in R&D and formulation, machine learning could support retrosynthesis, catalyst screening, or solvent substitution. For circular inputs, models could help select the monomers and additives that could kind of remain compatible with mechanical and chemical recycling, which could overall reduce the end-of-life complexity. In process control, let me give a quick example. Recycling units, are very sensitive to feed variability. So technologies like adaptive control models could fine-tune the temperature, resistance time, and energy input to handle the mixed streams. For in quality assurance, in pricing and grading, computer vision and technologies like spectroscopy, both combined could kind of give a more supervised learning and could also classify bales and flakes into quality tiers that kind of map the specific converters and price bands. So these are some of the examples, just a few examples. This is not a full list, of course, and you can get in touch with us and we could do a detailed application mapping and segmentation and assessment as well across each segment of the chemical industry value chain. So I would like to pass over to CC. Maybe you can take one more question before we complete.
We have a few minutes for a final question that was very interesting for me. What support is needed from global business services to support scaling the circular economy? So yeah, global business service can convert circularity from a set of initiatives into an enterprise operating capability by owning data integrity, transaction execution, audit, readiness. So global business services should operate the canonical data model for materials, emission, and product composition, and connect it to the ERP, manufacturing execution, traceability systems. So all harmonized identifiers and version control allow consistent reporting across business units and jurisdictions. So this reduces reconciliation cycles and prevents audit surprises. So other procurement and finance operations. So recycled content procurement and verification require consistent terms, quality definitions, and premium management. So centralizing these through global business services increase negotiating power and ensures that contract language aligns with the reporting obligations and downstream customer requirements. So in finance, GBS can standardize documentation for sustainability-linked borrowing and customer disclosures, which reduce variability across markets. So, of course, the regulatory assurance, producer responsibility submissions, product password registration, third-party certifications require a repeatable process and uniform evidence packs. So performance transparency in that GBS run performance cockpit that link cost, quality, and circular KPIs that are all aspects that could improve decision making in reallocating capital from lower train activities to use cases that show stable quality and predictable demand. So this is just a bunch of questions that we received. We will be contacting, as I said, individually to answer more of these questions. So thank you so much for your attendance today. And please remember, you can ask for a discussion with us and also, well, promote this webinar to see it on demand as well. So thank you so much to everyone. Thank you to my colleagues here as well.